Aggarwal, who's the Senior Group VP Head, BFSI Institutional Equities at Motilal Oswal Financial Services, joins in as well. Of all the updates that have come lately, what has been, according to you, some of the standout numbers, both positively and negative surprise, Nitin?
Yeah, hi, sure. Thanks for having me. So far, the business updates reflects a modest growth in the overall banking business. Some banks have reported a decline in their advances portfolio. AU Bank has relatively reported better numbers on both loans and deposit side, while RBL numbers also seemed in line. HDFC Bank numbers have come in today, and while the deposit traction remains in line, they have reported a 1.5 to 2%, slightly close to 2% kind of deposit growth Q on Q. But advances growth is almost flattish to less than 1%. So, which is something that is expected also, given how the RBI, we know that data is going on advances front, and expectations are of a lagged recovery in advances growth over the year. So I will say, barring the decline that has been reported by some banks, which is a little bit of a negative surprise, I think the rest of the numbers are broadly in line to our estimates.
Nitin, hi, morning. I guess PNB is the one, right, where the growth is lower. I'm just going back and checking the numbers. Yeah, their advances, domestic advances have grown 9.7%, which is lower than their overall guidance for the year. I mean, just looking at the starting Q1 trends, purely in terms of growth, I'm not talking about margin right now, purely in terms of growth, which would be the banks that you'll really watch out for?
So I think, see, AU Bank is one wherein certainly we are looking growth to sustain in early 20s, because it could have been mid-20s also had it not been for MFI, which is, again, we are expecting a decline Q on Q. And so that's certainly going to be on the higher end of the range within our coverage universe. Rest of the banks, I think growth rates over the year will be low to mid double digits, is something that we are looking at for most banks. And that's essentially because the system growth also, we are looking somewhere close to 11 for the year. And our hopes are pinned around a recovery in the second half, because first half growth may remain a little weaker and may run around 9-10% range is what we think.
So, the question, Nitin, really that a lot of investors are wondering is whether they're better off looking at tier 2 lenders. You're only looking at banks, so I'll restrict this to banks, rather than stay put with the comfort of, say, an HDFC or an ICICI, which I guess market wisdom is maybe they'll give you 10-11%. Tell us, in fact, what your estimates are. So the question is, between large banks and mid-sized banks like an AU you've singled out, but are there others which perhaps could be just a better investment this year?
I think you will still have to look at it on a case-to-case basis, because while mid-sized banking space has done well, and there are certain names like even we upgraded RBL Bank last quarter, and that has done fantastically in the current quarter. And the expectation is that with MFI stress receding and margins, after having seen an initial decline in the 1Q and possibly some bit in 2Q, these banks will do much better on the margin line, and alongside the credit cost benefits will also start to come through. So that will drive a healthy recovery in ROAs for these banks, and therefore the growth also can recover from where the trajectory is right now. So over the year, yes, if you take a next 12 to 18 month view, these banks can do well from where they are right now.
So RBL and AU small, right? I'm just confirming the names, the mid-sized banks that you like.
Yeah, so we like AU Bank, we like Federal, we like RBL, though Federal is still relatively larger, but we like Federal and we like RBL Bank.
Any trend that you can spot from the PSU banking updates? Because PNB yesterday was weak. Today we've got Bank of Baroda. And again, here the deposit growth has been muted. It's declined on a quarter-on-quarter basis. Is there any trend in the PSU banks that you can spot so far from the provisional updates?
I think, yes, BOB has reported a decline, while we were expecting a flattish kind of positive growth at least. But Q4 was very heavy in terms of business accretion that the bank reported. So it seems like some unwinding has happened on both the fronts, both loans and deposits, and that has resulted in a decline. And we have to watch out the trajectory here on, but I don't think that there is a reason to change the growth estimates for the year, because 1Q is known to be a little seasonally weaker. And some banks which have reported a marginal growth, other PSU banks like PNB. But I think over the year, we are still expecting growth rate to sustain around 10 to 12% range for these banks.
All right. Where do you stand when it comes to IndusInd Bank? Because earlier we had Nomura, turn positive on the stock. Very recently, we had Goldman Sachs turn negative on the stock. The stock is down about 40-45%. Everyone's awaiting the leadership change out there. How much of that is realistically in the price?
Yeah, so I guess we are somewhere in the middle. We have still maintained a neutral call. We released the note today only on Anderson Bank. And so what we have done in this is like we have taken off the bear case multiples. Earlier, we put out a target of 650 on the stock, which we have revised to up to 800 now. And the rationale is that with the impending appointment of the CEO, I think one will look forward to how strategically the bank moves forward and decides on the growth and the earning outlook shapes up. So the negativity that was there since last few months, more than a quarter, I think more importantly, what we are watching out is that there shouldn't be any more one-offs or regularities related hits that the bank will take, which I think is the view that we are taking right now. And while operationally things will take to recover, you will still see a muted business growth this quarter. Margins will likely take a further dip from the normalized number of 4Q. And gradually, we are expecting ROAs to recover towards 1% over the next few years. So, which is where we still maintain a neutral call on the stock, but we are keenly awaiting this clarity on the management and the strategic direction under the new management.
Absolutely. It's not for the faint-hearted because you have to, go through this transition period and then see how the bank emerges. Very quickly, last question, Nitin. You gave us a couple of your topics on the mid-cap banking side. Let's come to the big boys as well, the large banks between ICICI, Kotak, Axis, SBI and the others. What would your top picks be and why?
Yeah, sure. So we have been positive on ICICI Bank and HDFC Bank, and we have maintained this call within PSUs. SBI remains a preferred pick, and I think post this capital raise, SBI, I think the overhang will go away, and you have already seen a catch up with many of the other PSU banks. If you look at say Union, Canara, Indian Bank, these banks have done fairly well in the recent months. The return can be between 15 to 25, 30%. And I think as you move forward, the valuation gap now between SBI and the other PSU banks has narrowed significantly. So post this capital raise, I think that overhang will go away, and alongside a recovery in the overall earnings line as the margins start to recover over the second half for most PSU banks, I believe, will drive a re-rating in the stock. We still maintain of course, a buy on SBI with a 925 target.
925 on SBI. Nitin, thank you very much for joining in. Let's